Hi everybody, Single Player here. Just giving you a quick introduction on our session we had this past Sunday. We have Ernie, aka Trader of Futures, and he was kind enough to take the time out of his day to talk about his trading style, as well as some broader topics regarding cryptocurrency. You can find his social media links in the description below. Thanks for watching, and don't forget to catch us 24/7 on Twitch at twitch.tv/cryptoworldnews.
Oh, you got it? Right on, man. How's it going?
Going great. How you doing?
Doing
Sorry
well,
I'm
dude.
late. You got caught in a rainstorm.
It's all good. 5 minutes, 10 minutes. It's
Well,
not an exact science, but I'm glad you're here.
we walked the dogs early today so I could get back, and started raining like hell, and then the dogs took off. So can't control that.
Right on, right on. Well, did you get the team viewer information that I sent over to you?
You know, right after we talked, we left for the dogs. So I went for the dog walk, took a quick shower, and then got here.
Okay.
But I did download TeamViewer.
Okay, well, I'm gonna send you the information that you'll need.
I downloaded it and I installed it.
Okay. So just open it up and well, first of all, I guess we could start off with I kind of gave a brief background. You've been trading for 35 years, and you were active on YouTube for about the past 9 years, making a bunch of tutorial videos, trading videos. You trade not only crypto, but futures, Forex, and there was another one in there that I might be missing, but
well, let's just be clear about trading for 35 years. Anybody that tells you they've been trading that long, what you have to first ask them is, well, how long have you been profitable?
That's very true. I mean, if you've been trading for 35 years, I assume that you've been pretty profitable, or
Well,
maybe you just
no,
had a lot of money to.
that's not a good assumption, because I didn't start trading for a living until, seriously, maybe the past 8 or 9 years. In the beginning, I was all over the place. At first, I thought I was a hero. I'd make a lot of money, then I'd lose it. Of course, I always had an excuse for why I lost it. Make it, lose it, make it, lose it. And after a while, I started to see a pattern.
Right.
And it wasn't until I actually met up with who would become my mentor, one of my first mentors, that I started to get my act together.
What year was that, if you don't mind me asking?
About 10 years ago, but we actively went through kind of, I guess you could call it an internship. We developed our relationship and tried different things. We started a hedge fund together. Originally, the way it worked out was he discovered that I had this technical background, and he's a retired fund manager. And he said, "Hey, look, I'll teach you the strategy, trading the yield curve, if you build these tools for me." He was retired, lived in Hawaii, and he wanted to take his strategy and then codify it and turn it into something that was usable, that he could use at home. And so for the last 8 years, we've been developing that, and eventually it became my strategy. And during that, in return, he mentored me. Actually, he became one of my best friends too.
Very cool. Very cool. Yeah, it's definitely interesting to see where all of these crypto traders are coming up from. Some people have got years and years of experience. A good majority of us, myself included, are fairly new to these markets, or any markets of that. But we're all kind of consolidating here on this platform, and it's just been a great experience so far.
Yeah.
No, I'm sorry. Go ahead.
Well, I was going to say that, this crypto era, if people got into it early enough, I'm sure many people think that they're geniuses because they made all kinds of money when a monkey could have picked a crypto and made money. The real test is not what you do within a particular era, a few months or a year. It's what you can do year in, year out. And I'm going to make a prediction that most of the people that made money in the crypto era, I'm sure they feel like they were always going to create money. I guarantee you that 90% of them are going to become losers. I know that's a dreadful thing to say, but I'm just putting it straight out. That's what's going to happen. Same thing happened, in the last 10 years, where we had this incredible bull run, or before the .com era, for instance. Anybody could make money.
Is that just because of greed? People are going to get too greedy, and everyone's predictions are so astronomical, or what is the main factor of that?
It's the nature of the market cycle. So, for instance, when the internet first came online and everybody wanted to create a .com, there was incredible amounts of money thrown at any company that called themselves a .com, and they were all making money. It was all fake because they weren't bringing in any revenue. They were all trying out their stupid idea. And, I'm not saying that everyone was stupid, but most were just in it for the money, to a big, quick power grab. They wanted their Lambos and hoes, right? And anybody could make money prior to the .com bubble burst. And then when it burst, reality set in. And that era is absolutely no different than this crypto era.
Well, I'd like to think that
I'm sorry,
as far as adoption of the .com era, I mean, we're not even close. We're not even close to the amount of users, or if you look at like a chart of the .com bubble compared to where we're at currently with this cryptocurrency thing, there's still a long way to go, in my opinion.
Oh yeah, I think we're going to have another bubble first, and this intermediary bubble that we had is going to serve its purpose. And there's going to be, in my view, another crash, and we need that crash in order to kind of clear the slate, get a bunch of those crap shit coins out there and just get rid of them.
I agree 100%.
Yeah, they are bogging down progress. Now, last year we had all those lending companies, and most of those have gone away. We've realized that they're frauds. But in the midst of all these other coins that came up, these solutions looking for problems, they are no different. And most of them are going to have to go away as well. It's just going to be a matter of time. The difference is that we didn't have that regulatory scrutiny, and the investments weren't limited to accredited investors. Anybody could invest in it. And on top of that, anybody that put an ICO out there could also attract money, whether they deserved it or not. So there was far less scrutiny, far more open. And so as a result, many people that didn't deserve money got a lot of money, and got a real lot of money. There are people out there that collected $30, $100 million for crap ideas, and they still exist today. And they're going to be able to exist for a while, because it's going to take them a little while to go through that money. Now, there are a few companies that are doing some good work. There's good technology coming out. But let's look at the reality about, well, what is this industry going to look like when it finally matures, or at least gets to the point beyond its infant stage? Have you thought about that?
What do I think this industry is going to look like?
Yeah. Like, well, what will the market look like? I mean, how many of these crypto companies do we need? How many infrastructure companies do we need? How many coins do we need? Do we need a new token for virtually every market that's out there?
No, I definitely think it's oversaturated. But with that being said, I still think there's, it deserves a lot more, multi-trillion-dollar, market, if you will. I think
sure.
that it's very, very, well, people are just scared to get in right now, and rightfully so, like institutional investors and corporations and stuff like that. So I think we'll find a nice ground, maybe a ground floor that we're talking about. And then from there, I think it'll be, we'll start that new bubble, if you will, like we've been talking about.
Yeah, the .com era, that ended up being about a $7 trillion bubble. And we didn't even get up to $1 trillion this time before it popped. So in my estimation, it's got to be bigger than the .com bubble, just because of scale and time and inflation. I think that we need to, well, and that's a real hard thing to quantify too, because what are the companies going to look like? And that's why I was asking, well, what do you envision that the industry will look like? It's not going to be the same as the .com era, where we had all of these .com companies. There's literally millions of people out there now that have websites. In the crypto era, and what we're creating, we need, first of all, some kind of infrastructure that's going to support public ledgers. And I can't imagine that there's going to be more than half a dozen of these ruling the roost. Maybe 2 or 3 of them that are going to serve the majority of enterprise out there, and then a handful of others that have more specialty cases, and then the big push, or the big boom, the thing that's going to create the next bubble, are the dApps that get built on top of them. And then, of course, you're going to have another whole segment of companies that are going to build private ledgers, and they want to do that to secure their IP.
Right. Absolutely.
But what do we have now? We have 1,500 coins and probably 80 or 100 or 150 platform coins. Where are they all going to go? They're going to go all the way, most of them.
They're going to go all the way to 0.
Yeah. There's just not enough room for them all. And think about it, because when we get to that point where we start building, and also just in terms of realizing the whole dream of this sort of decentralized world, what makes a decentralized network really powerful is the network itself, the size of it. So in order for a network to really compete, it's going to have to get big. And there's only so big and so many people that can get big at one time.
Absolutely. I agree with you. Should we maybe hop on the stream and look at some tensor charts or whatever? I don't know what you had planned for today, but I'm kind of excited to see. This talk could go on for the entire the length of the segment here, but I'd love to maybe get started and see kind of if you have some ideas you'd like to share with us.
Let's see. I have TeamViewer up, and you said that you sent me something.
Yes, I sent you the. You go to like connect to remote desktop, and then the ID you should have, and then the password it will prompt you with after you connect.
Yeah, I got that. Let's put the ID in, and I keep it on remote control and connect, and then the password.
Yep. And what I would do, I don't know how to do it on a Mac though. That's the thing.
Well, so I have Team. All right.
Yeah,
so I need to turn something off.
Yeah. Did you figure it out?
No.
All right, hold on. I'm gonna move you to another room really quick.
You guys thought you got rid of me. I'm back. It's definitely an interesting topic to think about.
This is crazy.
What was that?
This is crazy. I was just linking the Trader of Futures debate video like the other day, and then now he's on here.
All right, we're good to go now. We had to figure out the TeamViewer audio. It's different on a Mac, but
yeah. So I have TeamViewer here, and it looks like I have control. And this is so this is TradingView. Cool.
Yep. You should be able to just open up a new chart or whatever you want to. You could, F11 and pull up tensor charts if that's what you want to do, or you kind of have an open floor right now. This is just one of our analysts that we were looking at earlier today.
Oh, all right. So it's okay whatever I do to this, or should I create a new chart?
I would just create a new layout. Do you know how to do that?
Not in this view. I've never been in this view before.
Okay, so
or working with TeamViewer.
Yeah, we'll get exit out of the keep going over to the right. There's that X. On the team.
X?
Just the one that's like you typed in BTC. I can't see where you're inputting for a new layout.
Oh, well, I haven't done anything yet. So
yeah, click that X right there that you're hovered over.
Right above it, where it says CW something. It says close. I'm afraid if I close that, I'm going to close TeamViewer.
Okay, all right, hold on. I'll set it up. Just give me a sec. Sorry, I should have just done this.
Yeah, we should have gone through a dry run or something.
No, it's all good. All right, new chart layout. And here we go. This is a brand new layout that you can basically do whatever you want with.
Okay, so let's do BTC, USD, and Bitfinex, I guess. We don't have BitMEX on here.
I believe we do, don't we? No? XBT to USD is for BitMEX.
Okay. All right. It's okay. This is fine. For demonstration purposes, right?
Absolutely. Now, not only have you been charting and trading for a while, but you also helped with developing
Tensor charts.
Tensor charts and a lot of indicators, and so there's sort of very involved in this space. It's fascinating.
Well, yeah, maybe I should give a brief, just to who I am, and so people understand where I'm coming from. Got about 35 years of experience, so in most of your view, that makes me like a grandpa, right? But I'm not. I mean, I'm not a grandpa yet. And I started out my career working for Raytheon as a research scientist working on intercontinental ballistic missiles, designing laser-based inertial guidance systems. So that kind of made me like a rocket scientist. And consulted for many years. I eventually worked for most of the major financial companies, including Fidelity. I helped Fidelity and Charles Schwab put on their online financial applications on the web when they first put it on. That was the initiation of everything that we do today. And from there, I went to work for Sun Microsystems and became chief architect of professional services, where my team was responsible for building out much of the infrastructure on Wall Street and a lot of the big investment banks and hedge funds and so forth. And that's where I developed my interest in finance. Although, like I said before, I wasn't really very good at it. I was very good at making a lot of money than losing a lot of money. Over the past 9 years, I'll tell you how I got into this all and got online. I was trading Apple, and at one time I was known as the Apple investor, and I was making huge bets, getting bigger every time, doing well. And then one day I lost a very healthy six-figure amount, and it really sent me for a loop. And so I decided to start a blog in a way to kind of look for some kind of spiritual redemption, try to find other people that I could commiserate with. And I took on a persona, and my online name was Zach Bass. Now, some of you may not know this, but if you're old enough, you will. There was a movie starring Richard Harris back in the 70s called Man in the Wilderness, and he was a scout, and he was bringing trappers across the tundra in the United States, across the wilderness. And he was mauled by a bear, and they left him there for dead. But he recovered and then wanted to go after these people and for revenge. But he found this sort of spiritual redemption. So the reason why I took on this name, Zach Bass, which was the name of this guy, was that I was also mauled by the bear. It's kind of a metaphor. And I was also looking for that kind of spiritual redemption. And so I started this website called Apple Investor, and it became pretty popular for a while. And then I started building up, a YouTube channel, and I guess the rest is history. From there, I met my mentor. Actually, met a few mentors. Had a small hedge fund during the housing crisis. Didn't do very well during that time, and had to close that out. And then since then, I've been developing this yield curve strategy for my mentor, and also building up trading strategies for hedge funds and well-heeled investors. And from that, I started building up this library of knowledge and putting it on YouTube. Unfortunately, about 4 days ago, I was the victim of identity theft. Someone I went to an AT&T store, assumed my identity, got them to put my phone number on their phones, and then use that capability to then delete my YouTube account. And I had a pretty big YouTube account, a lot of followers, over 1,100 videos. And so that's my big story.
Ouch.
Yeah.
Yeah, it's a long one, but it's very interesting. So
Yeah,
I appreciate you sharing that.
So my basic strategy that I use, what I found, people would consider me a professional investor, in that primarily what I do is I manage people's money. I have a small hedge fund that I run, and I've learned over the time, especially being an automated trader and basically a quantitative trader, that most of the indicators that are out there have no utility whatsoever. They are by themselves not a strategy, and that's really the problem with most people that trade. They believe that TA is a strategy, and it's not. TA is just a tool to help you model your strategy. If you don't have a strategy or a hypothesis behind what you do, something that actually defines what your edge is, you're going to end up losing most of the time. Now, I know that sounds like outside the world of most people today, because it's been so easy to make money with crypto, except for this past few months, it's been a little bit tough. And maybe a lot of people still have, if they get in early enough, still have enough gains that it sustained them. But trust me, when this market goes through the next flush and the next bubble, you're gonna be in for a harsh reality check, and things are gonna be different. So, anyways, that's kind of like my overall view. Now, let me tell you why I am not a fan of most technical analysis. I use chart patterns to some degree, and I use volumetric analysis or volume analysis. And if you look at all the professional traders out there, that's primarily what they do. As a matter of fact, most professional traders that are doing scalping, for instance, they don't even use charts. They just use order flow. The operators that operated in the stock market in the 1800s all the way up to the 1980s, they didn't have charts like this, these live charts. They had nothing. And so it was really up until even to the 70s, we were having ticker tape parades because they were still doing order flow and trading on tapes. It's not only until the last 20 or 30 years that we started trading online and having the advantage of real-time charts and data streams. Thing is that when the internet came on, the brokers realized, hey, they got a new bonanza. They got a whole new set of clients. And that new set of clients are what are now retail traders. They didn't exist before that. And so they needed a way to see how they could capitalize on them. And so the brokers developed what I call the broker narrative. And that narrative was designed to do probably what most people are doing today. Most people like to day trade. They like to trade relatively big. They like to stay, if they can, get out of the market. Don't hold things overnight. They follow that mantra, don't add to your losers. Let your winners run. Set your stops. Well, let me tell you something. Professional traders do exactly the opposite. Exactly the opposite. They don't use the indicators. They use volume as a primary tool. And they only use technical analysis to model their hypothesis, where they have found an edge. Now, I don't know if any of this is making sense to you, and I'm probably, maybe blowing some people's minds here, and they're probably thinking, "Man, this guy's full of crap."
I love it. I think we're all really enjoying it, and we're gonna save this video so we can rewatch it later and have our minds blown again. But no, this is great content. Thank you.
So,
real quick, when you say models, so you're saying that through the tools that you mentioned earlier, like using the volume, essentially they reach a conclusion and then they use technical analysis to verify that conclusion. Is that where you're getting at?
That's pretty much it. I mean, there's nothing wrong with chart patterns and certain indicators, but most indicators are lagging, and so they're not giving you real-time information. When you're using volume profile, you're getting a real-time view of what market structure is. It is almost impossible to go back and look at the past and say that is going to be my predictor for the future. How do you make money off of something that you don't know what's going to happen? Would you rather trade in the past or would you rather trade in the present? It's kind of a rhetorical question. Obviously you want to trade in what you know today and what is the reality today, not what is a derivative of what happened yesterday or 30 days ago. Well, all professional traders realize that. And so, yeah, to answer your question directly, you come up with some kind of hypothesis, like you have some grandiose idea. You've recognized some kind of crack in the market, and you know that look, if I take advantage of this on this day when this event happens, it's going to give me some kind of edge. And when it sets up in such a way, I can use some technical analysis tools to kind of model that situation from some statistical basis. And when that happens, I apply my tools and wait for that thing to happen, and then pound it. That's now the other thing that separates the professional from the retail trader is that most retail traders trade one thing, one asset, one time frame, one strategy. Now, I applaud anybody that says, "Well, that's not me. I trade all time frames. I trade many strategies, but are you systematic at it?" So most people will say, "Hey, I'm a day trader. I trade forex, right? And I day trade it." So what they're telling me now is that they trade in one time frame, they trade one asset class, and they probably use one strategy at that. That's probably the worst possible strategy that you could employ. And on top of that, they're probably using price action, which is a lagging indicator, and they're trading with past or old information. This is exactly the broker narrative. This is exactly what a broker wants you to do. And the reason why they want you to do that is that they know that is a losing strategy. And they know that, look, if you bust, you cost them less money. And as long as you produce enough transactions, that's all they care about. So the person who trades a lot and loses often is the broker's perfect customer. The person who sits there and trades very little, trades smart, stays in the market longer, is the worst customer for a broker because it costs them a lot of money in terms of margin to maintain those customers. They have to do it. Unfortunately for them, it only comprises about 10% of the population. The other 90%, they're more than happy to, push all this false narrative to the rest of the market that we've all thought was, and what we are all trying to practice and wondering why we can't get ahead, was the right way to trade. And I can guarantee you there isn't a single professional out there that is following that narrative. Well, I'm sorry, there are some professionals and they still follow that rule, and most of them are losers. A professional is trading multiple time frames, multiple strategies, and looking for as many non-correlated strategies as possible.
That's what I like to hear.
Could you give an example?
And why do you trade multiple non-correlated strategies? And well, when I say non-correlated, do you know what I'm talking about?
I kind of talked about this last night, how I look for different strategies or way to trade or research potential market action and try to adapt your own style. And based on what you're telling me, I mean, it completely makes sense that you maybe want to come to a similar conclusion or a potential play that happens with multiple different ways that you're almost all but confirming, like, okay, I'm pretty sure this is what's going to happen. At least that's how I feel when I come to that conclusion.
Sure. Now, well, the reason why you trade multiple non-correlated strategies, a non-correlated strategy simply means that the returns that the strategies that you employ are non-correlated from one strategy to the other. And that's because they are based on different hypotheses, different premise, a different basis, right? And the advantage of that is that if you have multiple strategies that all maybe simple but do okay, and not really care about whether or not one works forever, and no strategy works forever. Sometimes they're good for a period of the year. They might be seasonal, or they might be under certain market conditions. If it has a drawdown, the reason why you're trading the multiple strategies that are based on different bases or premises is that they may not be experiencing that same drawdown that one strategy that's going awry. And so that has a tendency then to minimize or cut short that drawdown. And if all your strategies in general have a good statistical basis and they're somewhat winners, then those profits will then be additive. And so what results in trading multiple non-correlated strategies is a much smoother steady equity curve. And it's also the reason why you don't really need stops either. Because if you trade small enough and you trade enough strategies, you can let a position go, right? If it goes against you, and only add to it when it's under, favorable to you. And that's another key that I didn't mention. I mean, that's another part of the sort of multiple strategies. You got to trade as small as possible. Now, again, that's probably anathema to what most people are thinking, and they don't even understand what I mean by small. And if you're thinking small, I want you to divide that by 10, and that's what I'm talking about.
So I've heard like estimates for like a typical like venture hedge fund uses around like 1% of their capital.
Yeah.
Is that what you're suggesting, or even smaller than that?
Yeah, that or smaller. I was running client money for the past several years, about a $6 million account, and my average position size would be about 0.5%.
Shooting.
Yep. And from that, I was able to achieve a 30% return. Now, that might not sound like much, but when you're trading a lot of money, that's a good amount. And we're not in the crypto world. And that's why I say everyone's living in a fantasy world right now with crypto. And that's wonderful. But when everything settles out, it's going to return back to normal. And again, people probably don't want to hear that as well. Same thing happens.
You mean as far as like volatility goes, we're not going to see huge swings and fluctuations and prices like we're seeing?
Yeah. Once all the risky stuff goes away and we have more stable businesses, then everything will start settling down. And then we're, every once in a while, a hot company will come up and we can take advantage of that. But things are going to settle out. It's not like today where, virtually everything is going up 5 or 10 or 15%. It can go up 30% in a day. How long do you think that can last? That's not a market that's sustainable.
And I think it comes back to the whole volume too. The reason why those moves are happening is because there's so much volume within that specific time frame. It will not continue every single day.
Sure, and really the crypto market is relatively small too, and so there's relatively low liquidity and very high volatility, and that's because there just simply hasn't been enough adoption into this market yet. I mean, once you get mass adoption, and right now, what do we have? Maybe 2, maybe 3% of the population that trade are actually involved in crypto. Once you get up in the 10, 20, 30% range, and then you have institutions in there, and then a whole dearth of derivative products and futures and options and ETFs, everything's going to level out. Volatility is going to come down drastically. So what we're living in today is really an anomaly, but it's one of those anomalies that the government is trying to figure out. Well, how are they going to control now? Will they be able to control it? And just when is it all going to settle out? Because think of it this way: how can you possibly have a currency that has fluctuations of 5 or 10% or even 2% in a day? You cannot sustain a business of any sort with that kind of fluctuation. And today we're seeing Bitcoin move, 2-3%. Oh, and all the altcoins are moving 2, 3, 4, sometimes 10, sometimes 20% in a day. That is not something that anybody can run a business on. Simply can't. It's great for speculators, and they don't have to worry about the business side because the business doesn't exist yet. And probably won't exist for another, 12 to 18 months at least.
I'd love to kind of direct it towards a chart or a tensor chart, or talk about some of those volume profiles.
Okay,
bit, if we can.
Sure. So the reason why I use volume profile, like I said, is that it allows me to see the market structure as it is today. And what do I mean by that? Well, most people, I don't know how many people are familiar with the volume profile, and why most people are not familiar with it. This goes back to my whole broker narrative. The reason why volume profile doesn't exist in every single trading platform is because it's not something that they want to show you, quite frankly. And I can't think of any other platforms there. Let's see. Thinkorswim has volume profile on it, but of course you need to invest and
And and that's kind of why it's like listed under the Pro and Pro Plus under TradingView, right? They you have to pay.
Sounds a bit loud.
So if anybody has taken statistics before, then you probably know what a normal distribution chart is. It's kind of, or the bell curve. Volume profile is really based on the bell curve. And if you look from a sideways view, this is what it shows. It looks like kind of a bell curve. Now it's kind of a freakish bell curve, but it still looks kind of like a bell curve. And the darker area that's in the middle is something called the high value node. And that represents about 70% of all the volume that occurs from top to bottom. This volume profile is showing us the volume at specific levels for all the visible chart that we see right now. And the dark area is showing us 70% of that total volume. So what that's showing really is the area that the market has found the greatest amount of value. And so we can conclude from that, if we go even further into this and say that, well, the very, very highest volume bar is showing where the absolute most amount of value that the market has shown. That's where they've spent most of their time trading. And if you were to look across, it doesn't look that way, but it is. I mean, you know, it looks like there are other places where it consolidates even more. And you'd think, oh, there's more volume there, but there isn't. The most of it is right here at this 82.30 level. And that's not something that you can discern from the time-based volume at the bottom. So what does that mean to you? Well, first of all, we can look at this from a statistical point of view. All the dark area represents about 70% of all the volume. And the reason why they use 70% is that also represents one standard deviation. And in statistical terms, one standard deviation is a bunch, or it's enough. It's better than a coin flip, and it's statistically significant. That's how you can think about it. So the idea here is that movement within that area is highly probable. Now, there's a really cool phenomenon or behavior of price as it moves across this. All of this is all representing where people have actually laid down their bets, and all of this volume. Not all of it, but a good portion of this volume, those bets still exist today. They are actually embedded in the market. They're places where people are holding positions. And so when price comes near there, people are going to act in certain ways. You know, they defend those positions, or that's where they've found value for whatever reason. That's where they've established a position. And so when price comes near a high volume node, that's what we call anything that sticks up, like this is a high volume node here, this is a high volume node here. When price has a tendency to be attracted to high volume nodes because that's where the market finds value. And then the low volume nodes, where we have a big well here, price has a tendency to be rejected. And you can see that by just looking at the line across. You can see that price, like right here, came down. It came down to here and moved away from it. So there are two different behaviors that happen. Either it gets rejected because for some reason the market doesn't find value there, or it moves through it very quickly, like this bar right here, or these bars right here. So those are two other behaviors that we can discern. So here we have, from the volume profile, I can see support and resistance, and I can also tell to a fairly good extent, and also with some statistical certainty, how price is going to behave as it approaches these different features. And that is real time. That's not something in the past. That these are, even though some of these positions were held in the past, when you get near them, they become reactive to the present. And that's the real advantage of volume profile. Now, there's a lot more that I can go into in terms of how it behaves. But in general, those are the two things that you would carry with you. There's also, now this is for the whole chart. Now, we probably all know that markets move in one of two different ways, basically. They are either trending or they're consolidating. Now, this is I'm not going to talk about the Wyckoff method or anything. I'm just talking about more discrete movements. We either are moving quickly from one place to another, or we're moving sideways and auctioning, trying to find value in that area. And that represents one of three different types of actors in the market. When we're moving very quickly from one place to another, those are what we call the longer time frame actors. Those are the whales and other people that have some real gravitas. They're pushing because of just their feeling, where they think value should be, or some market event or whatever, and they'll put their strength behind pushing that market up in that direction. Now, when it gets going and they get that momentum, and we start then finding where value is, then the shorter term, the medium term, and the short term time frame players or actors start coming into play, and they start auctioning back and forth, trying to establish where that value actually lies, and that usually will result in higher profiles, etc. So here's another thing that we can tell from that. We can tell who are the actors that are getting involved, and what how they're behaving. You can do other things, like you can look at very specific areas. We can get very fine grained, and volume profile, like traditional technical analysis, is fractal. In other words, we shouldn't be, and I said this earlier, that you shouldn't relegate yourself to one time frame, and you should have strategies that span across all those time frames. So you should have strategies that are more long-term oriented, some that are more swing trading oriented, and others that are maybe day trade oriented or scalping. But you should also realize that your profit potential on average, and from a statistical point of view, is always going to be greater the longer the time frame. So you should relegate your strategies accordingly, and the amount of trades and the amount of risk that you're going to take accordingly. So in other words, there's more risk in smaller time frames, there's less risk in longer time frames. So the longer time frame should be your bigger positions and the greater number of your positions, and then the smaller time frame should be your smaller positions and the smaller number of your strategies. Now, how you kind of come to that allocation, that's up to you. That will sort of fill out your wider strategy. Now, one thing that I didn't mention was that another thing that separates a pro trader from a retail trader is that they don't just trade on, hey, I got a bunch of strategies, I'm trading them. Everything to a pro is systematic. There are a few traders out there that are completely discretionary, and they're the exception, but they're very, very rare exceptions. People that can keep everything in their head and then just, go by the seat of their pants. But most pro traders are trading with a very specific, systematic approach, and that's typically involves what I call an OODA loop, or a campaign. And so when any professional trader approaches the market, they're thinking about, well, what's my first campaign? What are the strategies that I'm going to employ? How am I going to allocate my capital? And what am I looking out of those strategies? So they may set up a 3-month campaign. And so they time box campaigns, and they have very definitive characteristics to them, things that they set up and expectations. And then at the end of that campaign, they go through a retrospective. They evaluate what they did. Now, why do they do this? They do this because if they do not set a baseline and segment the timeout from quarter to quarter to quarter to quarter, they have no way then to judge themselves, to measure their performance. So that's why they do it. I mean, a systematic approach is designed specifically, first of all, to keep things in check and so that you can improve yourself. It's like I said, it's an OODA loop or a continuous improvement loop. You do a campaign for 3 months, you see how things work, and then you do a retrospective at the end of that campaign. During that retrospective, you're deciding, hey, do I want to keep what I did before because it was working, or have market conditions changed a bit and I want to mix it up a little bit, change it, and then you start the next campaign. And the idea is that each one of these retrospectives, you get a little bit better at what you're doing, and better and better and better, hopefully. Now, I'm not sure how many people are actually doing that as well. I suspect probably nobody. There's a pregnant pause waiting for.
I think a lot of people in the chat are really appreciating this. A couple questions coming through, but let's see. One from Owl Nation asks, so we should vary on every time frame. From Owl Nation. I think he was talking about. Oh, sorry. Go ahead.
Yeah. So yeah, and like I said, the realization. Here's the realization. Here's the reality that shorter time frames are more risky. They're harder to trade. They're harder to derive profits from. That's why you're never going to see a very rich day trader. As a matter of fact, most of them are losers. Swing trading has better odds and better percent overall potential to win. And trend traders, as most of us probably know, the most successful traders in the world are trend traders. So knowing that, that should kind of fit into your overall trading philosophy, right? And how you're going to allocate your resources and your efforts. But most of us are just too pig-headed to understand that and want to just trade because I'm going to make that friggin' day trading work, right? When what you're doing is you're just beating a path uphill. I mean, it's just not worth the effort. Just come to the realization that longer-term trading is best, medium-term trading is second best, short-term trading is third best. Allocate your risk and your capital accordingly. Create strategies accordingly. Do it in a systematic approach, and you're going to be much better off. Does that answer his question, you think?
I believe so. There's another one that came in if you'd like to take another question.
Sure.
This one is from Mr. Punta. He asked, since the visible range is dependent on your scope, how zoomed in or out should you be on the VPVR?
Well, first of all, I use the visible range chart just to create my overall market structure, and I do it typically in 3 different time frames. I'll start with like a daily time frame. Let's see, what are we on right here? 30 minute? 30 minute. So typically what I'll do is I'll start with like a daily time frame like this, and I'll draw a few lines, horizontal lines where my high value nodes are and where my I call them low volume wells are. So, the ones that I can pick off are like here. If I hold the control key down and drag, I can put one there. And then one down here. So what did I say I know about these particular areas? The POC draws one automatically. I'm assuming that's what this yellow line is.
Right.
So I know that when price comes near this, it's going to try to hang out on that high value node. And so I know that when it comes up, there's a potential for it to be attracted to this other one at 9,200. There's probably another potential for it to go down here to what looks like around 6,900, right? The 9,200 is a little bit closer than the 6,900. However, overall, we have a sort of my overall narrative, my bias is more bearish. So I would say that there's probably a 50-50 chance that we either go to 9,200 or 6,900, even though the 9,200 is a little closer. Because we're in a bearish mode, I'd say that the downward trend is more likely. So that gives you an idea of, overall kind of estimating kind of percentages and ideas. So that's another thing that I didn't mention, was that, I always develop an overall narrative of where the market is. That's my fundamental narrative. I always look at my fundamentals as being 80% of what I'm doing, and the technicals being 20% that help me model that, whatever edge that I find. So first thing I would do is I would want to build up a narrative of some sort that gives me a fairly good confidence about where I think is the primary direction of this market. And I don't think anybody can really argue that down is probably the most likely direction. Some people might be very hopeful that we are going to go up, and we very well could go up. But quite frankly, if you were to draw a big, let's see, if we were to draw a regression channel from here to here, I don't think there's any doubt of where this market is going. I think if you took a slightly shorter time frame, maybe from here to here, we're still heading down. So no matter, the only place that we could do it is maybe in these past few weeks we have a slightly upward bias, but from a longer term time frame we're still down. So I would say that we're down. It's maybe a 60-40 proposition, 60 to the downside, 40 to the upside. And I would use that to basically estimate, how I figure out, where price is most likely to go wherever I am. Everything's, big random shoot here. So I have to estimate this. There's no way to predict it. And I have to look at both possibilities. We could go up as well as we could go down. Why did we go up here when we were off the bottom? There was nothing in the market from a fundamental point of view that said that we should be going up. There were a bunch of shorts that were sitting out in the market. They were basically sitting ducks out there. And so what I think happened here at the bottom was that some whales and possibly some exchanges colluded and, put some money into this, and then basically triggered those stops, and then it acted like a string of firecrackers, boom, 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 right? And then they continued to push this market. They had to do that because the exchanges, in my view, were hurting. They weren't making any money. No one was trading. And of course, maybe whales have a different motivation. The whales, they don't care whether the market goes down or goes up. They're going to make money no matter what. And they're just trying to figure out how they can extract the most money from you guys.
I completely agree about that bounce when it was just barely coming off of 6,400. I was saying there's no significant levels like on the daily or the weekly besides our bottom that we just bounced off of from 6K and 5,800 in some cases, and then April 12th it's $9 billion in that 24-hour period out of nowhere. Was huge, and it took it straight to 10K basically over the past couple weeks.
Yeah, and what news came out? Nothing was positive. There were some things that the cryptoverse kind of spun into a positive narrative, but it was delusional, like
Right.
thinking that the SEC and the CFTC meeting that they had in front of the Senate Banking Committee was somehow positive because they didn't make any decision, or because the CFTC chairman waxed philosophic because his kids were finally interested in finances and he couldn't get them at all to look at money before this. And so he was so hopeful for the younger generation. And so everybody thought, oh, well, he has vision, right? What a load of crap.
It's just completely unrelated, but people are trying to correlate the two because it's cryptocurrency and it's Bitcoin news.
Yeah. They don't care. What they care about are two primary things. And the SEC has two primary motivations. One is to keep stable markets, and the other is to protect consumers, period. They're not there to try to spur innovation. the CFTC, they're interested in one thing, and that's creating new products so that they can put it on and then control them. Right? You know, they would love it if they had more ETFs and more futures things that they could put under their control. That's exactly what they want. But that has nothing to do with, you know, the market being positive or whatever. I mean, that's their motivation. And to think that somehow that was bullish was just very short-sighted. It's sort of like the same thing that happened when this bubble burst, right? I had produced a lot of videos way back in September when we had this first bear trap back in November, and I knew that, you know, now I'm a professional futures trader, so this is what I do for a living. And all the pundits out there in cryptoverse were saying, "Oh, the CME is coming out with futures, and when they come out with futures, then Wall Street's going to pile in." And I'm thinking to myself, man, you don't know anything about futures. Because first of all, Wall Street is not going to pile in. All right. They have no intention of piling in. And they're going to pile in when it's to their advantage, not, you know, when the market pops up. And there isn't a hedge fund out there that can, or any kind of fund that can jump ship and then incorporate cryptos into their portfolio. And to this day, they can't do it. So to think that Wall Street's coming in was delusional. The other delusional part was that thinking that the market is going to just keep on going up once those CME futures came in. This was a perfect buy the rumor, sell the news event. The thing that futures are good for from a professional trader's point of view and from a miner's point of view and a whale's point of view is now they had a product where they could hedge their positions. So what are they going to do with the futures when they're going to hedge? They're going to short, right? They're going to short the hell out of it. So I guarantee you what happened here was they played the market like a fiddle. They pumped this market up here. And then when on the very day, and I actually posted a video. Unfortunately, they don't exist anymore because someone deleted them.
We're trying to fix that. We're getting some content for you.
Okay. On the day that CME futures were released, December 15th, that is the day that the market turned around.
To the dot.
On the dot.
And how much selling pressure was consecutive those following days? Just so much.
Oh, it was like fairyland for the whales and everything. You know, they pile into the futures. They sell all their, they sell what profits that they made on the thing that they just pumped up. They pumped it up and drove it down. And then, and think of the transfer of wealth, right? They pumped it up, took all that money, and all those people that were coming in, the vast majority of people that came into the market, when Coinbase was announcing that we're getting 100,000 people a day, blah, 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 blah. The vast majority of those people came in the beginning of December, right around here, around 10,000, right? That big bump there.
10,000 was huge, by the way, as far as social media went, as well as the 5K, 7K, and hitting that mark. People couldn't stop talking about it. I felt more so than I've ever heard Bitcoin be talked about.
And the whales,
from people that weren't even into cryptocurrency at the time.
The whales, they're accumulating all through here. They actually played this pump and dump too, with the bear trap. But this was, once this started to happen, once we started to go exponential here, it became very clear to me that we were in bubble territory. And then when we had the bear trap, then I knew that we were in for a bubble. And so I used this as part of my narrative. I knew that all bubbles, they all behave the same. They have a blow off top, they come down hard, they have a secondary top, then they have capitulation, and then typically they have a dead cat bounce. And that's exactly what we had. If you go back and look at, go back and look at my videos. I started documenting this right around here with TradingView, and you'll see that I mapped all of this out weeks in advance. All these moves, all based on volume profile and where the profile was, almost to the dollar, 6 weeks in advance. But part of that was speculation, of course, but it's also an understanding of how a bubble behaves, knowing that this is going to be a dead cat bounce. Typically, the way a bubble behaves is you have that dead cat bounce. On that next bounce, you usually go down below the long-term regression line, and we never hit it. The long-term regression line is just below this. And that's how I knew that that was another indication that this was artificial, this bump, because it should have gone down below the long-term regression line, then come up. But essentially, my estimation is what we're going to do is we're going to find a range, probably somewhere between 10,000 and 6,500 or 6,000, and kind of go sideways, probably for a while. Maybe, my estimation is into July, and so I picked July for a very specific reason. Another thing that the cryptoverse got very excited about was the G20 meeting.
Yep.
And because they didn't say anything or come out with any proclamations or any guidance in the G20, they thought, well, they think everything's okay. They don't need to do regulation. But what actually happened was they sent off one of their financial committees off and to report back in July recommendations for regulation. And so that's what they're going to do. And so I think what's going to happen is that we're going to kind of drift until that point. And when the G20 comes out with what they expect to do, it's not going to make anybody happy. And I'm predicting that we have a crash then. And hopefully that crash is going to be significant enough to wipe out, I don't know, maybe 20, 30, maybe 40% of the shit coins that are out there. And from there, I believe then we can start, hopefully there will be some companies that have established public ledgers that businesses can actually sink their teeth into, and that real innovative dApps can be developed. Maybe there'll be some kind of killer app that will come out, not crypto kitties, that will spark the market, and then maybe we head into our next bubble. Now, I don't know if that's going to manifest itself by the end of the year. It's possible because, I mean, look how fast we came up here in last year. But I still have a target. I haven't changed it. I said from way back when, I said that our next bubble is going to be 30K. Or our target by the end of the year would be 30K. I don't know if that will be the next bubble. But I'm starting to kind of whittle that back a little bit, but that's still my projection. I think we're going to crash in July, and then we're going to start moving up from there off the bottom, based on some new technologies that are coming out, some new advances. I don't know which of the platform coins are going to take hold and provide some real value for corporate America. Most of corporate America has no idea how to use this right now. There are some that are very steeped very heavily in their own private ledgers, but the vast majority have no idea. And what they need is good infrastructure and clear vision, so that they can start incorporating and realizing this dream of decentralized ledger. But I don't think we're there yet. Now, a lot of people poo-poo a company like Hashgraph. And there are a lot of things that, from the purist point of view, it's not like a great solution because it's not open source, and somehow open source is the panacea in most people's mind. I'm not going to discount that. I'm going to say that that's probably important, but I think that they've come up with a governance model that is going to be attractive to most of corporate America and corporations around the world. That they can understand and they can use. Now, it may not be the perfect solution or the ideal solution for what people here, people that are investing in crypto world, think it should be. But from an enterprise point of view, now I want to emphasize that I was steeped in enterprise architecture and technology. I provided technical guidance to CEOs and CXOs and CIOs of Fortune 5s to mom and pops. So I sat down directly with them, helping them plan out their technology. So it's not like I don't know much about this, how they think. I'm telling you that most of them do not want any part of a public ledger that they don't have any control of. They want some kind of governance model that gives them some level of predictability. And that's just a fact. Now, things may change dramatically, going forward, and maybe they'll all see the light that everyone in the cryptoverse sees. But I highly doubt it. Boy, there's some quiet there. It's like a church.
Yeah, well, I mean,
I had some questions actually, Ernie.
there's a bunch of questions rolling through. I was looking for a good one, but go ahead, single player.
Yeah, so do you have any thoughts or predictions for 2020 considering the block subsidy halving? And kind of like following up on that, if you've seen like the halving charts from November 28, 2012, July 9th, 2016, and the next one potentially in like the 2021 area, I guess. Do you have any thoughts about that?
Well, assuming that Bitcoin is going to be the de facto standard cryptocurrency, right?
Right. Do you not think that's going to be the case?
I have no idea. I think that it has a good chance because it's the biggest decentralized application in human history, and it has a great head start, and it has brand recognition, and it has everything going for it.
Right.
Right. So there's a good chance that it will be, but a lot can happen in the next 2 years.
I agree, and you also hear some people talk about how they think Ethereum will be taking over Bitcoin potentially, in the future, maybe even the near future, the next year or two. And you also have those similar people saying EOS is the Ethereum killer and NEO is the Ethereum killer. And if they expect Ethereum to take over Bitcoin, why aren't these people talking about how EOS and NEO is going to take over Bitcoin? And that's with that same regard.
Yeah. And everyone has their eye on these projects that are, making their way through the cryptoverse that we are all familiar with. What if there's something that's completely outside of that?
Third wave cryptocurrencies in a sense.
Yeah, there's a lot of big companies out there doing development.
Yeah, and you look at a team like IOHK and Cardano, and that they have a lot of things going for them, and a lot of things in the works in the roadmap, and how they haven't even really been started yet when it comes to what they want to do with the technology. And you think something like that has maybe might have a major impact when it comes to cryptocurrencies in that time frame, maybe 3 years from now.
Yeah. I mean, when you mention something like EOS, I'm thinking that, man, that's just been a study in how to market something. Does that necessarily mean that they're the best solution? I don't know. And most of these infrastructure coins, infrastructure projects, it's unclear, why one of them would take the lead and what they have to offer, right? Corporate America is looking for far more than just a cool technology. They're looking for some kind of stability and some kind of governance model that they can go back. Yeah, go ahead.
And maybe even change, their entire infrastructure on how they operate. From their current systems in place that they haven't changed for decades, and
maybe, but they have to see. They have, it's not like all of a sudden they're going to have an epiphany and say, "Oh, yeah, it's quite obvious. This is the way we have to go. Let's scrap everything that we've been working on for the past 30 years." Who in their right mind thinks that any major corporation is going to do that? What major corporation could convince their stockholders that that's the right way to go?
Yeah, they're worried about trying to stop the bleeding from losing money or making money with
right.
what they have going on currently, and how do they change everything from the ground up?
Yeah, they all want to have a competitive advantage, but how are they going to ascertain or somehow do the calculus that somehow by adopting crypto or decentralized ledgers for a portion of their business is going to be the killer infrastructure that they need to to raise them to the next levels or heights or to the new millennia. It's a grandiose idea on the cryptoverse part, but that's not the way the big corporations, they're thinking, how do I make a buck off of this? How do
What about Walmart? Like Walmart had a case study where they used blockchain technology for tracking merchandise, and within like an avocado or something like that, they went from being able to take 7 days to track something to be able to track it instantaneously. Like
That's
it
awesome.
Cut down their costs and everything.
That's awesome. So they did a POC, and if they then create a huge competitive advantage, then other people are going to follow suit, and then something will come of it. Then you have the whole problem of, well, how do other people get involved in it? What standard interfaces are going to be out there? What standardization around APIs? There's so you're absolutely right that there's going to be companies that are going to be able to come up with proof of concepts that just look fantastic, and it will improve a portion of their business. Their supply chain management may improve a bit, and it will give them, say, maybe add 3 or 4% to their bottom line, and maybe that's all they need in order to basically wipe out all the competition. I don't know. Maybe it will add 10% to their bottom line, but it's not their whole business. It's a portion of their infrastructure.
So I was looking kind of like when you were projecting like the future of like coins and stuff like that. And one of my hypotheses or ideas is where I see is that how we currently have like the stock market, essentially coins are going to develop into, or companies and corporations are going to essentially develop into nation states where a form of crypto coin or altcoin or whatever they use, some decentralized ledger, is going to be their currency. And each mega corporation like Ford, for example, or Monsanto or Apple, they're each going to have their own coin, which could be traded kind of like a stock, which is going to be essentially their market caps. Instead of having stock, it's going to be a total accumulation of coins that they have within their ledger. And those can be traded via a centralized coin, which would be like Bitcoin, like essentially the way that we kind of trade right now. All these altcoins are projected things. Essentially, I think in the future, yeah, Monsanto is very evil, but at least I think so. In the future, like we're gonna see that like there'll be the central coin, which is the liquidity of all these flows, like how we trade ADA for BTC or XRP for BTC. Essentially, we're trading Ford for BTC or Apple for BTC.
Yeah, I can, that sounds like a great future. And I mean, it makes a lot of sense. But we're talking about the way things are now, huge amounts of money invested in the way things are. And we're also talking about not just an infrastructure and technology shift, but we're also talking about essentially kind of a cultural shift, a new way of thinking about business. And cultural shifts don't happen overnight. They happen. They happen with a lot of pain, because there are going to be people that are going to resist and other people that are going to go full force, and there's going to be disagreement.
So you saw you're fortunate enough that you have enough wisdom that you saw the creation of the .com bubble and things like that. What similarities of that do you compare that to Bitcoin? Like, do you see that progression occurring here?
Well, we saw what was happening, but we were, well, not me, but let me put it this way. In many ways, I was kind of complicit with the whole .com bubble bursting. And why is that? Well, working for Sun at the time and being chief architect, I was the guy who was kind of approving projects that were happening with all of these startups and .coms, because we were providing them with the hardware, the technology, and the software to enable their businesses. And we were creating and putting together all of these, what I call very creative financing deals, so that they could get hold of our technology, so that they could realize their idiotic dream. And so we were whores, right? Yeah, we sold it to just about anybody. We didn't care. You wouldn't believe some of the idiotic, stupid ass things that would come across us that they wanted money, but they had money, so we didn't care.
I'm laughing, but I'm not trying to spill my barbecue sauce. You can't hear me.
So yeah, so it's almost exactly the same. I mean, it's the same environment. The only difference, and this is a big difference, is that the people that could invest in IPOs back there were only accredited investors. Up until this point, it's been any Joe Schmo off the street could invest in an ICO. Now that may change. I don't know. That's going to be the big wild card, in my view.
That actually happened. Do you know of Refurium? It was a project ERC20 based token where people through Twitch would watch and earn these Refurium tokens, and people could sign up to join the ICO, but they actually handpicked the people that were able to purchase those.
Oh sure, yeah,
and
they're getting smart.
Not
now.
everyone was able to do that.
Yeah, most of the companies are getting smart now and only dealing with accredited investors because they want to stay in business. They don't want the regulators coming and shutting their doors. And that's, and of course there are some that still holding out hope that that there's going to be some kind of leeway here. Now in the United States, you have Wyoming that's being much more crypto friendly. I was watching I don't know if you watch Consensus, that total failure of a show, exposition. And they had the regulators on there and some of the crypto leaders, and they're saying they're just bewildered why the United States just couldn't act like all these other countries in Europe or Asia and just institute regulation across their country and just or have some sort of international regulation. I'm like, man, you live in the United States and you still don't understand the way that works. We are, one of the things that made the United States great is probably one of the same foundations why cryptocurrency has a potential to be great, and that's because it was developed to be the most decentralized federalist system of government ever devised. We are a decentralized nation. We have 50 states that are independent, and each one is set up that way and for the purpose where they have actually more power than the federal government, at least those powers that aren't specifically mandated by federal law, to do whatever the hell they want. And so the whole idea is that all these different states would then act like petri dishes and work it out. And then as you got a majority of those experiments working out, if it became big enough and made enough sense, then we would make laws that would be more consistent across the country. It's kind of like what's happening with marijuana laws today. But we're not there yet with crypto. And to think that we're going to create some kind of regulation across the nation that's going to solve all the problems is delusionary. It can't happen. I don't understand why people don't see that. It cannot happen in the United States. It won't happen that way. Every state is going to have their own view of it. And you're going to have some people that don't believe in crypto and some think that it's the next coming. And then it will work its way out. But, that may not be on the timetable of a lot of people that are investing.
Absolutely.
I don't see any other way that it's going to happen. Everyone has to come to that same conclusion and then have some kind of majority, and then that's what's going to happen. That's the way our country has always evolved, and it's evolved that way, and it's the reason why the United States is the most powerful country, most successful country on the face of the planet. It is the reason, and it is the reason why our powers actually not only get derived at the state, but they go even further than that. They go down to the individual.
And Ovenize has a comment regarding that. He says, you actually see this in the mining ecosystem. You could think of the pools or large miners as states. They don't always agree on everything, but they vote to steer the Bitcoin ship. and
Mhm.
all are invested in its long-term success because they are greedy.
Yeah, they certainly have
That's great.
incentive, but sometimes one wonders, what their real incentive is. Is it just to make money, or is it to try to maintain the network? Are they colluding with each other? With Bitcoin, they get to choose what transactions go in a block. How is that fair? When they're not making enough money, yeah, sure, the difficulty will go down, and there will be more, charge more for transactions and stuff, and they'll adapt. But there's going to be some point, if it goes down far enough, that there's going to be a number of them that will not be able to survive. And there'll be some collusion. I mean, there already has been. I mean, there is a concentration of miners right now. I think what 4 or 5 miners maybe are controlling.
Talking about like ant pool,
Yeah,
and it's almost 33% of the coins they're mining right now.
yeah. So how can we say that is not centralized? That's
Yeah,
pretty centralized.
it's huge.
And Bitcoin is vulnerable there. They're vulnerable in terms of the way their network works. I mean, China could start a new Bitcoin if they wanted to. They could cut themselves off from the rest of the world and then start a new Bitcoin on the same blockchain, and then they could open up the doors again. Then what do you have? Then you have two different blockchains on the same chain.
Do you think that could have any relation between some of the companies that are having partnerships with other currencies? Even Bitmain and Justin Sun have talks about partnerships and things like that. If those two are working together, what could come of that? If they're working together and the people that are talking have control of that much mining power for Bitcoin, what could they potentially do with something like that?
Yeah, and Blockstream, what is their involvement? They seem to be kind of directing, to some extent, the fate of things like Lightning Network. I look at Lightning Network. It's a very clever piece of technology, and that's one thing that you can say about a lot of the things that are being evolved these days. They're very clever and very, very cool. But to try to convince us that that Lightning isn't turning into a spoken hub liquidity centers is kind of laughable, in my view. Now, I may be way off, but that's my professional opinion. To me, I see liquidity hubs being created around Lightning, and liquidity hubs is just another word for banks.
Oh, for sure.
Yeah, I haven't heard anyone bring that up in quite some time. So awesome. Yeah. Not many people agree with me on that. So
they don't want to agree with you.
Well, of course not. Everyone wants it to. They want it to succeed because they're all in. So
yeah, of course. I understand that. I understand, but see, and that's one of the reasons why I think that my videos were taken down, because I was one of the very few people out there taking these contrary positions and trying to make people think about these things. What's the reality? And of course, people would tell me that Grandpa, go home. You don't know what you're talking about. Why don't you go learn something about technology? And I said, well,
it's the new age.
Wait, so you actually had videos taken down talking about this very subject?
All of them.
All of my videos were taken down. My entire account was compromised.
That was what, over 1,000 plus videos?
1,100 videos, yeah.
Oh, so the trolls like hacked your account or something?
Somebody, they went into AT&T and committed identity theft, got my phone, and then used my phone and the SMS feature to compromise my password, and then took down all my videos. Now, they also did they also compromised my PayPal, but fortunately I had previously taken all the money out of there, and my Dropbox. My expectation is that they were probably looking in the Dropbox if I had like a picture of my passport or something.
I'm sure.
But why would they take down my YouTube? It was obvious, what they were after. They wanted me out.
Right.
So everybody's going to hate me for asking this. So because of all that, are you actually bullish on Bitcoin Cash?
I'm not bullish on Roger Ver. I think he's a dickhead.
Fair enough.
But Bitcoin Cash, I think that it adheres to the original vision that was in. Now, whether it adheres, and I'm not a purist on this, but whether it adheres to the original vision, you can say that that's good or bad, and so therefore it should deserve the the true standing for where Bitcoin is. I don't know. I think the thing that really at this point trumps everything is the size of the network and the branding.
Right, the network effect itself.
Yeah. And Roger Ver isn't doing very much for the branding. Maybe he is. I don't know.
Yeah, he's a pretty bad spokesperson.
He's getting he's generating the buzz, that's for sure.
Yeah.
At least he's got that part down.
Yeah.
Whether it's good buzz or bad buzz, he really has to work on that front.
And in most people's, if you just ask the average Joe off the street, they don't even know what Bitcoin Cash is.
No. And if they do, they're just like, that's trash. So
yeah. So the branding is all with Bitcoin. I mean, everyone's heard of it, but most people don't really even understand what it is. So there's a lot of education that has to be done for people, and that's why I'm saying if there is the thing that's going to educate people is getting a public ledger out there that can provide some true useful plumbing for companies, and some kind of DApp that is the killer application, like an email, or maybe a shopping or like Bazaar. Are you familiar with that? Bazaar.
Oh, Open Bazaar, yeah.
Open Bazaar.
No, it's fantastic.
Yeah, something like that. But if that caught on, and then people can just understand it and get it, and then really see it from a real use case why this is worth pursuing. That's the type of thing that needs to open people's eyes. But until that happens, most people, if you don't have people, the technology is completely dependent upon that network effect.
Exactly. And so these videos that all got taken, do you still have any of those, or are they still available? Or
no, over 9 years, no. And I've gone through several computers since then, so it's not. And most of them, I didn't really have any intent to save them. I wasn't really looking to as a business when I first started them out. It was like I said, it was more of a spiritual redemption exercise to try to make myself feel better and put information out there that I thought was good and I was learning. And over time, I just developed quite a library of really useful things that attracted a lot of people, and it built a brand for me and a pretty good business. But now it's completely gone.
You still have Twitter, though, correct?
Yeah, but I haven't really kept it up. I mean, I'm a verified user on Twitter, and I have almost 27,000 followers. But I have another account that at one time had over 60,000 followers that I just let lag, and it has virtually no engagement power at all. And so I've put a little bit of effort into the one I have now. It has about 27,000, but I only use it really as a posting mechanism, essentially. But I'm starting to revive it a little bit. I mean,
I saw the main page you have now with your new video, and if you guys haven't seen it, it's actually hilarious on his intro. So you guys need to check it out. I've linked it in the chat several times, and we'll continue to link it. And we'll also throw our session up on our YouTube, and I'm gonna get all the contact info. Well, like social media that you have. If you want us to throw that on there too, like
I really appreciate that. I mean, any help that I can get right now.
YouTube.
I have a lot of people that are. They say that they've downloaded my videos and they're sending me videos, and I'm wondering how I'm going to put it all together.
Awesome, that's good.
Yeah, but I don't know how you make up for 1,100 videos and not only that, but all the comments that I've made in other places and the linkages and to other sites. I have I have educational programs that were using the videos, the unlisted portion of the videos, although some of them I've moved on to Amazon Cloud, that now that courseware is no good. So
I haven't lost a video library, but I've lost music libraries, pretty sizable ones in the past. And every time it's happened, I guess I start to rebuild a library that might have maybe a different path to all the genres of music that I have. Do you think this is going to change the types of videos that you put out there, or are you going to continue to make the same kind of content that you've had on your previous videos?
well, right now, for the past 6-7 months, I've been just putting out my contrarian view on Bitcoin and the market. That's what I enjoy right now, so I'll probably continue doing that. No one's going to shut me up with my point of view. So I'll just keep on doing that. And what I'm trying to do is I'm trying to get people to see the light and be realistic about where this market is going. That I think it was Mark Twain. He said that history doesn't repeat itself, but it rhymes, right? So we're rhyming with the .com bubble, and I just want people to see that and also understand that the technical analysis and all the methodology that most people have been using is designed specifically to make them fail. And that's one thing a lot of people don't understand. And so I'm trying to help as many people as I possibly can to try to show you why it fails and why trading that way. You got to wonder, well, why don't professionals trade that way? But it's a hard thing. It's a hard thing to. It's a hard concept to put out there and say that everything that you've learned from every book that you've ever seen was specifically designed to make you fail, and they're going to look at me like they're friggin' crazy.
Yeah. Well, yeah, and that's the thing. Trying to build I think what we're trying to do here is build a community and essentially a platform to where people can voice their opinion or just do what you're doing. Talk about what you've got going on and your upbringing and how you got into the space. And maybe even show your trading ideas and talk about some throw on the charts and talk about cryptocurrency, maybe even the mining aspect for some of us. But I think the vision is to have a platform for people like yourself and others that might not even have an audience to begin with or no one to speak in front of, and just to get their ideas and point of view or maybe even a project or application out there.
Well, I'm really glad that I met you guys, because it's I was wondering, I was kind of wavering, to tell you the truth. I wasn't sitting still at all. I'm out there like a mad dog producing content right now. But to have a platform where I can, this is always what I've done, and it's what I enjoy doing, and so I'm really glad to be a part of what you're doing here.
Yeah, I definitely appreciate your time too. I've watched a lot of your content and your debates too, and most recently your debate with Tone Vase was a good one. And this is just
I convinced Tone to use to look at my stuff.
And that's the great thing about being able to talk about our different styles, because we're just bouncing knowledge off of each other. And if there's something I didn't know that you knew, and I can take something away from it, that's great. that's time well spent. And if you know who Jordan Peterson is, he kind of talks about that too.
Big fan.
Where you basically you want to evolve and learn from each other, and I think a platform like this is probably a great place to do it. When you get the right people together.
Oh yeah, and quite frankly, the thing that I learn most from other people that are that need the most help, to tell you the truth. I know that sounds weird, but because it humbles me and it keeps me kind of grounded. Because sometimes you can get on your high horse and think that, what was it? My one of my mentors said. He goes, I don't care what you think when I know I'm fucking right.
Yeah.
And when you start developing that kind of attitude, sometimes it's the right thing to do, but it doesn't necessarily help the people that you're trying to help.
I can relate to that a lot. I found that like you learn a subject, right, and you kind of like you expand very deep in it and you explain it all, but when you have to teach it, often you find like the people that you're teaching it to, they ask those questions where you're weak in, like the point where like you didn't really understand something fully, or that they kind of retest those areas where maybe you didn't understand it to the best, and they make you explore that.
Yeah. So sorry about the language. It slips out.
That's fine. We're on Twitch. We're good.
This is an entertainment platform, so
Yeah. Uh, this is the way people talk in this industry, I think.
it really is. It really.
But no, I should try to clean it up. But I'm from the Boston area, so the way we talk.
I can tell when you said open source. It slightly came out.
Yeah, I mean, the way I talk is so tame compared to what I grew up with.
And in the space too, there's a lot of younger. I'm 32, so there's a lot of upper 20s, lower 30s. So we're at that age where we can do what we want and say what we want. At least on the platforms, but it is interesting because some of our audience are just listening. You're at work on the way home, or even have their kids with them. So sometimes I forget to.
Yeah, and I'll never use it. I'll never use the language as a way to sort of emphasize my particular feeling. I was just sort of repeating what my mentor said, so that's my excuse.
It's all good. It's all good, guys.
And touching on that, you mentioned you even learn from some of the people that need the help the most, and I get that in the chat too, where someone was like, "Oh, do you see this this potential pattern playing out?" From like a certain time frame on like the 4 hour, and I'm just looking at the daily and I completely missed a potential play, and it's just because I think I'm used to what I'm looking at, I'm used to my style, and just a completely different point of view can be like, hey, have you looked at this potential? And I think it also comes back to what you mentioned, using different what had you said earlier, different styles to come to like
different
the same
strategies,
conclusion.
non-correlated
Different
strategies.
strategies.
Yeah,
Exactly.
well I and every time that I've got myself to a point where, I don't know, a crossroad or whatever, I usually surround myself with a lot of people. And it was the same thing when I was at Sun. I found that the best way to get things done, I couldn't be the big brain there. I couldn't be the guy that goes in there and just tells everybody how to do stuff. In order to be successful, what I had to do is I had to find people that knew a lot more than I did. Can't help myself.
Oh, good, man.
I have to surround myself with people that just have different experiences and know more about something in particular than I do, and that's how you become successful. When I had that experience when I first lost a lot of money with Apple, the first thing I did was I created a blog and I started developing relationships online, and through Twitter and the blog and other things. And that was like the beginning of my my investment career, when I started attracting all these people and started learning from other people. And again, that's why I'm so appreciative of this platform. You obviously have a great group, and you have a good sized audience, and people are really, they want to learn, and I want to learn from them as well. So
Yeah, absolutely. That prevents the whole echo chamber effect from happening.
Well, the thing is, here's the thing. I'm a process expert, and I'm sure a lot of people that are involved with this are also probably involved with software development. I'm just making that assumption. I know that a lot of the guys that are involved in crypto are also involved in software development, and I'm an agile agile software development expert, an agile methodologies expert, and I'm a Scrum master. I don't know if you know what that means or not, but
I only know the term from rugby.
Yeah, right. Well, anybody that's involved in software development knows what Scrum is. It is the de facto standard for organizing teams around developing projects. And I'm sure that virtually every one of these crypto projects are using some form of agile methodologies. And the most important part about an agile team is the team itself, and then developing a team that works well together. And the very basis of that team at the foundation is trust. And the thing that sits right above that trust is the ability to be able to engage in constructive conflict. In other words, you're not afraid to bash things out with each other because you have that underlying trust that you're not doing it to slight the person or to demean them or anything like that. It's a process that each of you engage in to try to come to some sharing of ideas and beat it out. But of course, then after that comes accountability. We're all after, and we want to be accountable for each other. So that is probably the most important thing here, and that's developing effective teams. And like I said, the foundation is trust. And then after that is, once you have that trust, then you can start engaging and talking in ways that that don't upset people, because they know that, hey, we're on the same team, we're working towards the same goal. And because you're talking like that, I know that you're talking about it in a way that's meant to get my attention, not to to call me a jerk.
Oh yeah, that's exactly. And I would have to. I used to agree with you that everyone is in tech until I joined Crypto World News. I still think it's a sizable percentage.
Well, I think so too, because everyone gets into the technology. I mean, you have to appreciate the technology somewhat, and that attracts a lot of people that are into distributed computing, for instance. And the interesting thing is that what I find very odd or sort of myopic of the way a lot of people are in this industry is, I'll make an argument over a particular technology or the distributed nature of something, or whether or not something's Byzantine fault tolerant or whatever it happens to be, and usually I get the argument that, look, you're some old fart, you don't know what the hell you're talking about. Why don't you learn about this technology? But what they don't understand is that all this technology, I was using this back in the 70s and the 80s. It is the derivative technology of everything that I developed signature analysis machines back in the early 80s that were based on cryptographic one-way cryptographic hashes and distributed systems. The technology isn't new at all.
Oh yeah, it's just all these different technologies coming together in this harmony. It's too bad that we didn't figure out how to do the the proof of work and all that stuff to solve those problems. But hats off to Satoshi for putting all those pieces together.
Yeah, and proof of work is an interesting consensus algorithm. I'm not so sure. I think it works for certain types of decentralized networks. I'm not so sure that it works well as a consensus algorithm for a worldwide currency. As a matter of fact, I think it's exactly the wrong type of consensus algorithm for a worldwide currency. It simply is inefficient and expends way too much energy.
Yeah, I mean, I agree. I mean, I guess we're probably going to find out here pretty soon. As Single Player was saying earlier, when the block subsidy drops so far, if people aren't using this, then the miners won't even be able to continue. So I guess we'll find out pretty soon.
Yeah. Yep.
Well, we got a question rolling in from the Twitch chat by Truff Shuff. Asked, can you ask Mr. Speaker, apart from the financial aspect of it, if he's for or against the concept of decentralization?
Oh, I thought I made that clear.
That I would agree, but it's a question, and they were.
I said that the reason why the United States is evolved to one of the greatest nations on earth is because it's decentralized. Decentralization and bringing the power out to the individual is the the ultimate in morality. Maybe that will answer it. All right, that's how
I
strongly
think it sums it up pretty well.
That's how strongly I believe in decentralization. The rights of the individual trump everything.
Oh, no doubt. Well, it was fascinating having you on. I mean, we'd love to have you back. Definitely could talk about a lot of these different topics, and bring a new perspective to everybody on Twitch. I know everybody really appreciates your time.
I really appreciate you guys having me on. It was fun.